Most people think the danger of AI is obvious. Robots replacing humans, jobs disappearing overnight, machines doing everything faster and cheaper. That's not what's really happening. The real impact of AI is quieter and far more dangerous. It is not just replacing jobs, it's changing the economic meaning of having a job at all. For decades, the deal was simple. You exchanged time and skill for income. Governments taxed that income. Your job anchored your financial identity, your credit, your retirement. Your sense of security. AI breaks that deal without announcing it. Instead of eliminating work outright, AI compresses value. Tasks that once justified full salaries are now completed in seconds. Roles that once required teams now require oversight. Experience that once took years to build is embedded into software. The job still exists, but it pays less, grows slower, and offers less leverage. This is the first illusion people miss. My job is still here, so I'm safe. But income erosion doesn't feel like job loss. It feels like stagnation. Raises shrink, bonuses disappear. Freelancers undercut prices. Global competition intensifies. Employers quietly reset expectations because I lowered the cost of competence. The result isn't mass unemployment, it's mass income pressure. This matters because modern financial systems are built around wage growth. Taxes assume rising incomes. Retirement assumes compounding contributions. Debt assumes stable earning power. When income flattens, while costs rise, the system doesn't break loudly, it squeezes, and AI accelerates that squeeze. White-collar workers once insulated from automation now feel it first. Analysts, designers, writers, marketers, accountants, not replaced, but augmented in ways that reduce bargaining power. When one person with AI tools can do the work of 5, salaries don't disappear, they normalize downward. This creates a new financial anxiety. Working harder, but moving nowhere. People feel it but can't name it. At the same time, companies restructure how they think about labor. Fixed salaries feel risky. Contract work feels flexible. AI makes output easier to measure, which makes workers easier to replace. The psychological shift is profound. Jobs stop feeling permanent. Careers stop feeling linear. Loyalty loses value. This changes how people spend. When income feels uncertain, people either freeze or compensate. Some save aggressively. Others spend impulsively because the future feels abstract and fragile. Both reactions ripple through the economy. Now layer in the second effect. Productivity without prosperity. AI boosts productivity, but productivity gains no longer flow naturally to workers. They flow to platforms, owners, and capital structures. The gap between effort and reward widens. This is not a moral argument, it's a structural one. AI rewards scale. Individuals don't scale, systems do, which means the traditional promise, learn skills, work hard, earn more, becomes weaker, not stronger. This is why AI feels unsettling. Even when it's helpful, it delivers convenience while quietly rewriting leverage. And when leverage shifts, taxation follows, because governments tax what's measurable, reliable, and easy to collect. That brings us to the next layer of AI's financial truth. Not your job, but your taxes. Here's an uncomfortable truth most people don't want to think about. Governments don't tax morality. They tax stability. Historically, wages were the most stable source of revenue. Predictable, documented, hard to hide, easy to withhold from. That's why income taxes dominate modern systems. AI changes this equation, not by destroying income, but by fragmenting it. More people earn through mixed sources, contracts, platforms, digital products, side income, micro-entrepreneurship. AI enables this flexibility. But flexibility is harder to tax cleanly. When traditional wages flatten and variable income grows, governments face a gap. They don't respond by taxing less. They respond by expanding the tax net. This is already happening. Digital reporting expands. Platform transactions become visible. Payment systems integrate with tax authorities. Automation doesn't just track productivity, it tracks money flow. AI makes tax enforcement cheaper, faster, and more precise. In the past, enforcement relied on audits. Slow, selective, human-driven. AI shifts this toward continuous monitoring and anomaly detection. This isn't dystopian. It's efficient. But efficiency changes incentives. When AI identifies patterns instantly, governments can target revenue sources previously ignored. Small side incomes, online sales, gig work, digital services, cross-border transactions. The psychological effect is subtle but real. People feel taxed from more angles. At the same time, AI increases government spending pressures. Why? Because AI disrupts labor markets faster than social systems adjust. Retraining costs money. Transition support costs money. Healthcare costs rise as stress and instability increase. So governments face a dual challenge. Slower wage growth, higher transition expenses. That gap must be filled. Historically, when wage growth slows, governments shift toward consumption taxes, usage fees, and indirect levies. These feel less visible but hit wallets just as hard. AI accelerates this shift because digital payments and platforms make consumption easier to track. Every transaction leaves a trail, so while people focus on job security, the more profound change happens quietly. How much of every dollar they keep? AI doesn't raise tax rates overnight. It increases precision. Precision means fewer leaks. This creates a paradox. People feel squeezed but can't point to a single cause. No dramatic tax hike, no obvious policy shock, just less leftover money. That's AI's financial shadow. And it doesn't stop at taxes. It reshapes how people perceive money itself. When income feels fragmented and taxes feel everywhere, financial confidence erodes. Planning becomes harder. Long-term goals feel fragile. This is where the wallet comes in, not as an object, but as a psychological space. The final truth of AI is not economic, it's behavioral. AI doesn't just change how money is earned or taxed, it changes how money feels. When systems become faster, smarter, and more automated, friction disappears. And friction is what once protected people from financial drift. AI-powered systems optimize convenience. One-click payments, automated subscriptions, instant approvals, invisible renewals. Each feature feels small. Together, they reshape behavior. People don't overspend because they're irresponsible. They overspend because nothing signals them to stop. In a world where income feels uncertain and taxes feel diffuse, spending becomes emotional regulation. Convenience replaces deliberation. This is where AI's influence becomes deeply personal. Your wallet stops being a boundary and becomes a stream. Money flows in fragments. It flows out silently. Awareness lags behind action. The danger isn't collapse. It's drift. Drift is harder to correct because it doesn't trigger alarms. You don't feel broke, you feel vaguely behind. AI amplifies this by reducing decision points. The fewer pauses you experience, the less reflection occurs. But here's the hopeful part. AI doesn't force this outcome. Design does. The same intelligence that removes friction can reintroduce awareness if used intentionally. People who regain control in the AI era don't rely on discipline. They rely on structure. They separate spending environments. They create visual feedback. They slow decisions that don't need to be fast. They treat money as information, not emotion. The real divide in the AI economy won't be between those who use AI and those who don't. It will be between those who let AI decide for them and those who use it to see clearly. Your job will change. Your taxes will evolve. But your wallet, your relationship with money, is still yours to design. AI's financial truth is not doom. It's exposure. It reveals how systems shape behavior and gives you the chance to respond consciously. Those who understand this early won't just survive the transition, they'll control it.